subscribes. Let's do this. How we doing today? Happy Thursday. Welcome to the closing beat. Yeah. What's good? Everything good with you? We're financial advisors here at Jazz Wealth, and thank you for joining us and hanging out with us here and, learning about the markets and doing all that good stuff. We're going to do more of that here today. We're going to talk about the markets, of course, and a whole lot of other stuff. There's actually a lot going on, and that's why I'm a little scatterbrained there, because there's a fair amount of things going on that, we come out of the Fed meeting thing, and it's like, okay, we're all looking over there. Now we're all looking over here, and there's a lot more going on. So time to get back to all that. We're still got earnings season going on. There's a lot of that out there. We still have the Fed, of course. They're front and center there. And remember, the Fed said that it's too early to think about pausing rates, right? So they kind of gave the hint that, all right, maybe we could slow things down. We talked about that yesterday. But remember that they said that they know there's a lag to their adjustments, right? And we covered that yesterday. But the market can still go up even though the news, that we have. They can certainly still go up, right? Any pullback in inflation. Now we're looking at economic numbers, right? Any pullback in inflation, any increase in unemployment, we get that number tomorrow. Any weakness in overall inventories, overall production, any weakness in production, any weakness in supply chain, right? Where we start noticing the economy slowing down, further weakness in the housing market, all these economic numbers that come out like on a daily basis, man, just hit you. These are all good reasons for the stock market to rally. So initially you look at the Fed and what they said and you're like, oh man, stop it, guys. But in reality, there's a lot of data, which they've said we're still data dependent, kind of. And so if that data starts showing a little bit of softening, that's good for them. That's what they're looking for, right? So we'll see what happens. As far as the markets go, yesterday was the worst last 90 minutes of the stock market on a Fed day ever, right? Which put two and two together, right? This is not my stat. The worst 90 minutes ever for a Fed day. If you put two and two together, there you go. 90 minutes, that's 2:30. The Fed decision, the rate decision, comes out at 2. So why wouldn't it be the worst last 2 hours? That makes it very clear that yesterday, the worst 90 minutes ever really started at the 2:30 mark. Well, that's because it all came based on Powell's comments there. So these press conferences kind of killing them here in the short term there. But I say that worst last 90 minutes ever. Keep in mind that the Fed didn't really do press conferences until 1994. So they were there, of course, and they've been around, but they haven't done these press conferences. They became more vocal since 1994, and it's become increasing over the years there. So they're very much more transparent, or at least they try to guide with their words and stuff like that. Anyways, if you take a look at the S&P, you can see where we're at. We've got a little bit of a rally back to the 50% mark here, about halfway between highs and lows. The market has since pulled back. This pullback so far is aggressive. It is, like we mentioned yesterday, you don't want to be the first person to buy today, all right, after having such a strong down day, so hopefully you avoided that. And you look at this and say, great, is this going to be a higher low, or are we going to wiggle around and drift down and make a new low? Right now, you would say, we've already erased half of the entire rally in just 3 days. That doesn't seem too good, right? So you're on guard for things like that. If you look around the S&P here today, the weakness, actually, just going to be these big names. Look at what Apple did, and see if this, there we go. So Apple down 4.25% all in one day, and it's not just them, it's Alphabet, which Alphabet is a big weighting. There's two classes of stock. It's a big weighting on the S&P. Look at Amazon. Amazon down 3-ish%. Yeah, right at 3%, making new lows. These are aggressively pulling the S&P down, so there's not going to be anything in the way of upside until these stocks, which, by the way, are getting oversold, can do anything or can help support the market. I'll throw in there Microsoft as well. And let me check something. All right, just checking. Throw in Microsoft as well and some of the semiconductors. Oh, Adobe. not the biggest stock in the mix there, but Adobe being investigated by the Department of Justice for their Figma acquisition there. So obviously weakness there. Lots of weakness in the big tech names. Add to that some weakness over in the financials. Visa, MasterCard, American Express, Capital One, all of these guys just having the pullback, the continued pullback from the Fed meeting there. So that's what you got going on there. If we look at Boeing, not Boeing, we look at the Dow. I'm going to reference Boeing. I stuck in my head. The Dow maintains its position as the best performer recently, meaning it gained the most and it's falling the least. So something to be said about that. Boeing was one of the big contributors here today. Oh, there you go. Back all the way to the 200-day moving average there. This is pretty cool, actually. I'll stop on this for a second because Boeing had their first investor day in years. I'd guess and say 2017, 2018, somewhere in there is the last time they had an investor day where they get to talk about their projections and everything, and anybody can listen in and stuff. And so naturally, the response to the 6% day today is because of what's been digested from that. There's a simple analysis you can use with Boeing, though. Do you like Boeing? Are you guys, if you're interested in Boeing, you're like, I'm just waiting for my opportunity to buy it or whatever. Boeing follows free cash flow. And I should say the stock price lags free cash flow. That's all we look at. So there's a lot of components. Oh, man, how many 737 MAXs are you going to make? 787s productions? Okay, there, right? What are we doing? Are we adding in a narrow-body airplane? No, not going to do that. Are we doing some space stuff? What is it? There's a lot of things you can look at, but at the end of the day, I'm going to pull it up while I'm talking. The stock price follows free cash flow, and so you got some good news there. Give me a second to pull this up here. They expect free cash flow this year to be between $1.5 and $2 billion. Next year, between $3 and $5 billion. And in 2025, over $10 billion. That number was underestimated, by the way. Let's go over here. There you go. So I did it quickly, but here's what we have here. We've got the price of Boeing. And in the background, in green, I put their free cash flow. You're just tracking it quarter by quarter. I could probably find a better one here, but that's what happens. When free cash flow, which comes essentially ahead of the stock price, starts to get weak, the stock gets weak. When free cash flow turns the corner, the stock turns the corner. What's happening now? Free cash flow is obviously getting better, much better than it has been. It's positive. That's for starters. That's a good thing. But it's expected to be up here, right? What's that tell you for the stock price? Everybody's using that. You invest in Boeing when free cash flow is expected to grow, even if only by a little bit there. So good one there. Now, the reason it's higher today, in my opinion, is because that $10 billion cash flow number that they had for 2025, the top four analysts have already figured out that it was supposed to be around $12.5 billion based on the production numbers that the company themselves says they're going to hit. So they think that Boeing took that 12.5 and said, make it 10 and we'll look a little bit better in the future there. Or if we're a little off, it's no big deal. And so all the analysts are saying that you were at $12.5 billion, therefore your price of the stock should be considerably higher than where it's at. And so that's basically what's going on there. All right, tomorrow with the stock market, we have the unemployment number. So Lord help us if the unemployment number is flat to lower, right? You would think that'd be a good thing. It's expected to come in at 3.6%. I think it'll come in at 3.5%. I think it won't be changed at all. But if it goes down for whatever reason, there's not really anybody that thinks that's going to happen. Think about what happens now. Every economic number means something. So if the unemployment rate goes down, and total participation in the workforce and everything stays flat or maybe goes higher, right? That's a reason for the Fed to continue doing what they're doing. If the unemployment rate ticks up just a little bit, or we find out average hourly earnings goes down, okay, that's good for the stock market. It's bad for the economy. It's good for the stock market because it means the Fed will likely slow things down. So that's a big number coming out tomorrow. If you are interested in getting up early and seeing what happens there. Wine and wealth tonight. You ever heard of the Augusta rule? I'm changing up what we're going to talk about a little bit. The Augusta rule I keep seeing come up online, on social media. Did you know you can rent your house out from your business and you can take that money tax-free? It's technically true, but there are some really specific rules you have to follow that the IRS, it's plain as day. They say if you don't do this, you cannot take that money as tax deductible. So what we did, actually Haley here put together an entire template. This is what you do, then this is what you do. Click here, then enter here, then click here, then enter there. I'm going to go over that tonight, and we will, of course, have it available for clients. Should you decide to do that, you should do that. And so that way you can make the most of your dough there and, hey, not have some money be taxed, right? Take advantage of that. It's just that, unfortunately, almost everybody gets it wrong on the old social interwebs there. All right, a couple other things to point out. The dollar, that's a 2% pop here over the last 5 days. That is abnormal volatility for the dollar, looking stronger there. Energy, kind of fascinating what happened today here in energy. So oil's down, energy's higher there. It's basically because of the top four, ExxonMobil, Chevron, ConocoPhillips, and such. It was helped today in part by ConocoPhillips. Did you see what happened there? So let's go over here. ConocoPhillips hits new all-time highs. Not really a shocker there, but it's the fourth largest position in the XLE. So if you're paying attention there, ExxonMobil and Chevron, of course, had good days as well. But they report their earnings, and they raise their buyback to 12% of the total value of the company. That doesn't sound like a lot, so let's say it this way. They raised their buyback by $20 billion to a total now of $45 billion. That's a lot of dough right there, right? To buy back shares. That's a form of returning money to shareholders, although Washington would disagree. And so what you have is people investing in the stock because they're buying back their shares. Stock prices go up when shares get bought back. We talked about that earlier in the week there. They also raised their dividend to 51 cents. That puts it like a 4% yield or something like that. They chose to take their money and give it back to shareholders. I can almost promise you there will be comments coming out of Washington about this because they say, oh my gosh, you guys with your oil prices, you need to lower your oil prices. Just keep in mind that this is a fact, right? This is not my opinion. This is purely political, right? And it should be. That's this political season, right? They're doing their thing. But it's purely political because if you look at ConocoPhillips' earnings, they had such a good earnings report because of natural gas, not because of oil. So it has nothing to do with them lowering the price of oil or even if they wanted to, doing something like that. Natural gas made the money. So as soon as you see somebody pick on ConocoPhillips, you'll now know that they just took the headline and went with it. They didn't actually do any research. Kind of fascinating there. All right, one other thing to point out here. Ta-da, ta-da. Nope, we're going to go over here. Ta-da. So you got the tech sector moving lower. Of course, you know now why that is. PayPal, remember we talked about them having an easy beat. They did beat on earnings, actually. The stock is a little bit lower because of forward guidance there. But they did some quick things to try to trick the system, and it didn't work. Remember, 3 weeks ago? We talked about how they had renegotiated contracts with their vendors. They slowed down their marketing efforts, right? So that's easy money. Just stop marketing as much and you've got more money in the bank. And they slowed the pace on what they call their low return investments, i.e. their trading platform. That's not going well for them. And the idea was we now have more money in the bank. That made it real easy for them to beat on earnings. It might have been 4 weeks ago we talked about that. But nonetheless, that is what happened there and they did it. It's just Wall Street saw right through it apparently. Or there's something else I haven't caught yet. Okay, stocks in the news. Let's talk about this, and I'll get out of your way there. It's QCOM. It's quite a drop there today. Latest semiconductor to report its earnings. By the way, they were not good. If you are tracking along there, down 7% on the day there. Earnings beat by 2 cents. Revenue was as expected. The guidance was 20% below expectations. Look, it's okay if Wall Street says this and you're like, we're close, but, it's in here. Now, you can't be 20% off. These guys on Wall Street are not that stupid. And so that was part of it there. The company said we're seeing rapid deterioration in demand. AMD gave you that hint the other day, right? See how the puzzle pieces get put together? They just said the same thing, knowing that ahead of time might save you 7% there. They also said the same thing as AMD, that there is elevated inventory right now. And by the way, Apple, Samsung, and Lenovo are their biggest clients. So if they're seeing less demand and Apple's their biggest client, why do you think Apple had such a rough day and continues to get really rough? Now you learn something, right? Putting the pieces together. Sunrun. These guys killed it, by the way. Great earnings for them, just like Solar Edge and everybody. They're doing really well here. They beat on revenues by 26%. More importantly, the company is seeing 44% year-over-year revenue growth. That's worth an 18% pop on the day, huh? That was a really good earnings report all just across the board for them. Booking.com, yeah. Volume's a little bit higher than expected in a couple of their categories. Rental cars, flights, total bookings. They're seeing an improvement in the number of room nights. And they said, we're seeing encouraging bookings despite this economy supposedly weakening. So good for them. Robinhood, not so good, but it did reverse on the day there. Initially, their earnings looked pretty good. Revenue beat by 1%. They lost 25% less per share than you would think that we thought they were going to lose. The weakness came in the transaction revenue. Remember how they make money? Robinhood's not rocket science to analyze. They make money by selling your orders, and whether you like that or not, I don't have a problem with it. But that's how they make money. The majority of how they make money. So you can't have transaction revenues down. You can't have transactions down, period. If you make money based on how many times people press the button, you need people pressing the button as much as possible. Well, it didn't help them there. It didn't help them there in crypto either. Monthly active users were down quite a bit, I believe double digits. Assets under custody, we don't say management, but assets under custody down 8%. You know what did it for them? And now we know you guys can't hide anymore. Margin lending. They made their money in margin lending. It's a scrappy little company. They'll do whatever it takes. So I now know that not only do a lot of you guys using Robinhood have a margin account, but you're also utilizing that margin as well, because they wouldn't make money if you weren't utilizing the margin. So what you doing out there, huh? Taking on a little leverage? That's kind of fun to see. Oh, you know what's not fun to see? Roku. Okay, it finished only down 4.5% on the day. They beat on the surface. Like if you're just browsing headline numbers, that's a beat there. Problem is they said their losses would be more than double what Wall Street expected. So could that be them throwing in the kitchen sink and just saying, look, it's going to be really bad, guys. And then everybody goes, okay, well, now we know what that is. We can justify the stock price. I don't know. But that was not pretty for them. One other thing I'll point out, did you notice all the buybacks today? There's going to be a race to get these buybacks in before the end of the year, because they got to pay more next year if they're going to, for stocks that are going to buy back, or some of them do anyways. What was it? CF Industries, ConocoPhillips, of course, you know about that. Cognizant, there was a bunch of them. We don't need to go through all of them, I guess, but there was a bunch of them buying back their shares. And I don't know, they got the extra money. You think, or you're being told that the economy is weakening. I have this extra money. What do I do with it? I'll buy back my shares. Because why? Why would you do that? Because that means at some point, if things get really weak, you can just put them back on the market, right? Put them in treasury. You've got them back there. You think you're buying them for a better deal. You sell them one day and you don't have to raise debt. That's part of the reason why they do such things. All right, fess up. Who's like leveraged to the hilt on their Robinhood accounts there? We know it's got to be a lot of you, right? There's no doubt. Robinhood wouldn't lie to us, man. You can't lie on those earnings reports there. Oh, there we got somebody. There you go. Money market, CD rates, yeah, moving quickly. That's at least one good thing about the higher rates there. Yeah. Consumers are all out of their cash reserves. They're just starting to stop spending. Slow sales of iPhones, the worst consumer. Well, technically, yeah, they're not out of cash reserves in the traditional sense, because cash reserves, believe it or not, includes home equity lines of credit. It should not, but it does. Grinding to retire is commenting again. Currently a 94 on BX. Do you think it'll go back under? Oh, you want it to go under 85? Is that what you're saying? You're averaging into that sucker? Well, you're at a tricky point here, right? Because we have a series of lower lows. It's clearly in a downtrend. There's no arguing that. They're, working their way through all the ESG stuff they want to do and trying to adjust and do that. But what if it starts making a new high from here, right? So I think I'm assuming you have the position you want to have, but you would love to have a little more if it gets to 85. So I'll cheer that on for you. But boy, you have that offensive play as well. What happens if it starts turning higher there? Because you're at that point where it could kind of go either way. You could get the technical traders to do one or the other. But welcome. You want to add positions to other areas than tech, but you have quite a difficult time seeing the red on tech. Well, even more reason for you to spread out a little bit, right? Go look at healthcare. Well, maybe not industrials, but go look at healthcare over there, or zoom in on your tech and maybe consider some semis there. Do you think we have a Santa Claus rally? My opinion doesn't really matter, but I do think so. Dusty T, right here for you, man. What are your thoughts on starting a position in Alphabet? Just because it's extended in the short term, like it's attractive, right? Look at some of these stocks: the Amazon, Meta, and Alphabet, Microsoft, right? These things making new lows. It's like, yeah, I would be tempted to start a position there. Yep. Which stock do you think is better? I can't really say that. I would say that Meta, if you're a long-term investor, how can you not like it down there? That's cheap. You got to be a long-term investor, though. In the short term, it's going to be a hot mess. Yeah. Is that thing broke? That sounds a lot weirder. It's just powering down. All right. Is Fang not a thing anymore? I believe it still is, yeah. See why not. And see the people that comment the same thing, Meta is so cheap. Okay, in the short term, you can't expect to use that as something that's going to miraculously bounce and you're going to make 20% on your investment. But you see how many people say that now, that Meta is cheap? So that money's dripping in. People are saying, I want to own some Meta here. Maybe I don't know what the hell the metaverse is just yet, or even if it's even going to work, but I know it's cheap and they still have a core business. That core business can make some money now. So, yeah, you guys got it. Hey, I got ready for our class tonight. If you are looking to know the details of that tax-free income, man, we're going to go over the exact things that you have to do to make sure the IRS doesn't say, you can't count that as tax-free income. We'll cover it all tonight, and then I have a takeaway for you. You'll be able to take that with you. Haley made it. It's awesome, really. Click on the links. It'll actually walk you through everything. So you don't have to stress, man. You got somebody on your side. And for the rest of you, it's time to get your dough straight, right? Think you know it. Money's tightening up out there. You need somebody on your side? We're always here for you. We love the motto, we don't grow unless you grow, right? If your dough isn't growing, then we shouldn't be growing either. We shouldn't be like every other advisor that says, well, buy this, and then they make a commission or something. We don't do that nonsense. All transparent, right on the website there. Hope you'll join us. And then we'll see you later tonight in the closing beat, huh? All right. Enjoy the rest of your day. And everybody else, grab a drink. Let's hang out tonight. We're going to learn some cool stuff. See ya.